Get you another voice from the Valley. He's one of the most low-profile investors who made a lot of money by selling not one but two ventures he founded to giants like Amazon and Walmart. And he's also one of the earliest investors who bet big on Facebook. So it's safe to presume that Anand Rajaraman does know a lot about the world of startups and the art of investing. Speaking to CNBC-TV18's Shireen Bhan in San Francisco, he says startups which are sitting on some fat valuations should be ready for a shake-up. Shireen started off by asking him if he thought that the valuation of Indian startups were now looking bloated.
Well, we already, I believe, are in the beginning of that shakeout that's going on. The last couple of years have been this period of easy money, where lots of money has flowed indiscriminately into a lot of companies, pumping up valuations as you suggest.
Yeah.
And some of them may have gotten out of hand. I believe this year the easy money has dried up, and a lot of startups are sort of focusing on getting back to basics. We hear talk about unit economics and profitability and repeat usage, and customers and stuff like this. So we're sort of getting away from companies just buying customers and focusing on the top line, and moving to the fundamentals of building a sound business. So there is definitely going to be a shakeout. Not all the companies that are that were funded and that were hyped during the cycle are going to survive this downturn.
You've often said this, that survival is not a strategy for startups, or should not be a strategy for startups. But how do you balance this out?
The companies that are most likely to survive are the companies where with the strongest kind of founders, where the founders still retain most of the control of the company, and will innovate out of trouble. The companies that are least likely, in my opinion, to survive are where the founders retain the least equity in the company, and over time have sort of ceded a lot of the management to either investors or other people who they've been led to a point by their investors. And those are the companies that are least likely to succeed.
Given the kind of money the Indian startup ecosystem has seen, and a lot of it is venture-backed at this point in time, do you believe that we're going to be seeing a sort of graveyard of startup zombies?
Well, it's not really a graveyard, right? The zombies wander around the city, really, right? So, I'd say we're going to see a lot of zombies in India for a while to come. They'll wander around and they'll kind of die in their own time, or some will get consolidated or bought. One of the things that happens with zombies is the best talent also leaves, because nobody wants to stay at a zombie. So these will be at some sort of zombies that are eviscerated from the inside as people leave and leak out, and the best talent leaves, and then goes to start the next set of companies, and then slowly the zombies will realize they are dead and they'll fall down, but it'll take some time.
Slow and painful process. But since we're talking about consolidation, and I want to specifically ask you about what you foresee as far as consolidation within the Indian e-commerce space is concerned, given the fact that you've sort of been on the confluence of both traditional as well as online retail with Amazon and Walmart. How do you see that playing out in India?
Sorry, can you repeat the question?
The consolidation within the startup e-commerce space.
Oh, yeah, the consolidation within the startup e-commerce. Yeah, so I think that it's bound to happen. I think if you look at what happened in the U.S., Amazon is the sole leader in e-commerce in the U.S. today. India, we have several startups. One of which you've invested in, Snapdeal. One of which I'm an investor in, and I hope they do well. Snapdeal. I think there is going to be some consolidation. I don't think the market exists for 3 or 4 e-commerce companies, all competing roughly in the same space without any differentiation, right? So either they will have to differentiate themselves and focus on different, in some way they have to focus on different customer segments or different price points or something.